Welcome back to the deep dive. So, if you're trying to build towards, financial freedom right now, you probably know that feeling, opportunity paralysis.
Oh, yeah. Information overload, definitely.
You're juggling your main job, maybe you've got a side hustle, maybe you're messing with crypto or thinking about real estate, and every single day there's some new strategy popping up. It's a lot. It's exhausting, frankly.
It really is. Modern wealth building, it almost feels like it demands you're everywhere at once, right?
Yeah.
Trying out all these new things while somehow trying to stay focused on what actually matters.
Which leads to just spinning your wheels sometimes. Incredible effort, but the results, kinda meh.
Exactly. Mediocre results for massive effort.
Okay, so that's our mission today. We want to cut through all that noise. We went through a whole stack of sources, everything from like the basic psychology of money to these really specific modern investment ideas. The goal here is to get you from that feeling of juggling flaming calculators, maybe, to actually having clear, focused steps you can take.
And right away, the sources we looked at really pointed to this core tension you mentioned, this push and pull between exploring broadly, trying things out, and the absolute need for deep focus, if you want, like real returns.
Attention.
Yeah,
That feels like the key thing we need to sort out for you today.
it is.
All right, let's get into it. We really have to start where all the sources say wealth actually begins, not the bank account, but in your head.
That's exactly right. It's so easy to jump to strategies, spreadsheets, apps, but if the mindset, the internal foundation isn't solid, everything else just kind of crumbles eventually.
Yeah.
True wealth, the kind that lasts, it's built first in your, let's call it your psychological framework. Our sources really hammered this home. Your beliefs about money, often unconscious ones, your immediate emotional reactions, the story you tell yourself about finance, that stuff pretty much controls where every dollar goes, earning, saving, spending, investing, all of it.
Okay, so what are the big roadblocks then? The psychological barriers we need to be aware of, maybe start dismantling.
Well, there are a few key ones that kept coming up. First, those really deep-seated beliefs, like a scarcity mindset.
Money is hard to get, there's never enough,
Yeah.
that kind of thing.
Exactly. And if you truly believe that deep down, what do? You hoard, you stick cash in savings accounts, earning next to nothing because you're afraid to lose it, instead of, putting it to work to actually grow your wealth through sensible investing.
And the flip side, which feels especially relevant today with social media everywhere, tying your self-worth to your net worth.
Oh, that's a huge one. It drives so much performative spending, doesn't it? If you feel like you are your bank balance, you're constantly working and spending just to look successful.
Right, keeping up appearances.
Yeah, instead of strategically building real, lasting value for yourself, it just fuels that lifestyle creep, makes it almost impossible to save and invest what you actually need for freedom.
And then you've got the big emotional triggers, fear, greed, guilt even.
They're like financial landmines. Fear. It can just paralyze you. You're so scared of losing money in the market, you stay out completely, which guarantees, zero growth.
Right, you lose out on potential gains for sure.
Definitely. Then greed pushes you the other way, makes you jump into risky, half-baked ideas, hoping for a quick win. Chasing hype.
We see that a lot.
But guilt. Guilt is sneaky. Some sources mention people feeling guilty about, say, automating retirement savings. They feel like they should be spending that money right now, maybe on family or immediate needs.
Wow, I hadn't thought of guilt applying there.
Yeah, and that feeling, that emotional block, stops them from using powerful tools like tax-advantaged accounts that can make a massive difference long term.
So beyond just raw emotion, there are these cognitive biases too, right? Like mental shortcuts. Our brains take that mess things up. Loss aversion was mentioned.
Absolutely. And what's wild is how today's tech, like trading apps, can actually amplify these biases. Loss aversion, like you said, basically losing hurts about twice as much psychologically as winning feels good.
Okay, so how does that play out on a trading platform?
Well, it means people often sell their winning stocks way too early. They grab a small profit because it feels good to lock in a gain and avoid the potential pain of it going down later.
Ah, okay. Taking chips off the table too soon.
Exactly. And conversely, they hold on to their losers for way too long. They get anchored to the price they originally paid.
Anchoring bias. So you keep staring at that red number, just hoping it bounces back instead of cutting your losses.
Precisely. That purchase price becomes this emotional weight, this anchor, and it overrides a clear-head look at whether the investment still makes sense going forward. It stops you from moving that money somewhere better.
So what's the antidote to all this? How do we fight back against our own brains?
The solution that consistently came up, is cultivating a growth mindset about money. Seeing setbacks, losses, budget cuts, things not working out, not as failures, not as reflections on you, but as data, as lessons.
Learning opportunities.
Yes, that mindset shift is what makes it possible to take calculated risks, which you absolutely need to do to build wealth. You learn, you adjust, you keep going.
Okay, so foundation is mindset. Mental resilience, spotting these traps. Where do we point that newfound focus? This brings us back to that big challenge we started with, exploration versus depth. And that quote we found from one of the synthetic sources.
Yeah.
You don't need to do everything to be extraordinary. You just need to choose the right few things and go deep.
I really like that quote. It nails the modern problem, doesn't it?
It does, but let me push back a little. Some sources definitely suggest that the fastest way to get ahead financially involves taking bigger risks, high-reward ventures, things that might require you to pivot quickly, try lots of things, explore quite a bit.
Yeah.
Doesn't that speed, that need for exploration kind of clash with just going deep on a few things?
That's a really fair point, and it's a nuance. The sources actually clarify quite well. Exploration, it's totally necessary. It's part of the journey, especially now. The market changes so fast.
Yeah.
You have to test things out. Different business ideas, different skills, different investment strategies. You need to get your hands dirty, figure out what actually works for you, what fits your skills, your life. That initial phase, that sort of adventure, it's crucial. It's how you filter your options.
So it's not saying never explore, it's saying explore with a purpose to find where you should go deep.
Exactly.
Yeah.
You test, maybe you fail, you learn fast, you drop what's clearly not working.
Yeah.
But once you have that clarity, once you've identified your target, then focus is what gives you the power. Trying to do everything at once just spreads you too thin.
Yeah, your money, your time, your energy.
All of it. Divided across too many things. And you never get those really big breakthrough results that only come from true mastery, from real depth. Focus is what turns that potential into actual momentum.
Okay, momentum. Let's harness that. Let's shift from the mindset and the focus idea to the how-to, the practical stuff. Our sources laid out a pretty clear blueprint, kind of like a total money makeover idea. And the core concept is super simple, really. Before you chase some huge new income stream, you've got to get your existing house in order. It's about rethinking what you do with the money you already have.
This is where we stop looking for that magic bullet, that lottery ticket, and start doing the essential groundwork. It's maybe less glamorous, but it works.
Totally. Think of your finances like a super cluttered garage, right? This blueprint basically hands you the broom, the trash bags, the labels.
Okay, I like that analogy.
Step one is the big clear out, getting rid of high interest debt, the stuff that's really dragging you down, like credit cards. Then, right away, building up that emergency fund, that cushion.
Because that removes the immediate stress, right? The fragility that triggers all that fear and loss aversion we talked about earlier.
Exactly. And the framework really emphasizes starting small, building momentum with tiny, consistent habits. You don't need a huge salary to begin this part.
Not at all. It's about action.
Yeah. It could be as simple as deciding, okay, for 1 month, I'm going to track every single dollar I spend just to see where it's going.
Or making coffee at home for a week instead of buying it. Sounds tiny, but
it builds that muscle, right? That feeling of competence, of being in control. And that feeds right back into the growth mindset. You start to believe you can manage your money.
And this whole idea, this quiet power of just sticking with it day in, day out.
Yeah.
It connects perfectly to one of the most striking stories we found, the story of the janitor.
Ah, yes, the unassuming janitor who quietly built a fortune.
It's incredible.
And this is where that deep focus idea really clicks, regardless of income. This guy, his job wasn't fancy, he wasn't an executive, but he ended up with wealth that honestly put some high earners to shame. He didn't start a company, didn't make crazy bets.
So what was his secret? What the story shows is that financial success, real wealth, it isn't really about the job title or the fancy car or even a huge salary. His wealth came down to basically two things: being incredibly consistent with saving and just avoiding lifestyle inflation, keeping his expenses low.
He just saved consistently, invested simply, probably low-cost funds or something, and let compounding do its thing for decades.
That's it, the magic of time and consistency.
It's actually really humbling. It forces you to realize that the person quietly building serious wealth might be the one making your latte, not necessarily the one driving the sports car. It makes you question all those hustle culture status symbols.
Absolutely. It brings it back to behavior. What you do with your money matters so much more often than how much you actually earn in the first place.
Okay, so it reinforces the whole path. Master the mindset, find your focus, then apply that relentless janitor-like consistency to the right actions.
Exactly. Which brings us to the next big question. Okay, great. But what are those right few things right now?
Yeah.
In today's economy, 2024 and beyond, where should you maybe apply that deep focus?
Let's look at some specific areas the sources pointed to. First up, the creator economy. It's huge.
Massive. The scale is just undeniable. Sources talked about the 2025 landscape being enormous, but it's definitely a spectrum, right? You hear about the top 1% making millions, which can feel intimidating.
Yeah, it makes it seem impossible for everyone else.
And you have tons of creators still worried about, algorithms changing or their cat videos getting demonetized.
So how does someone apply deep focus there without getting discouraged? Where's the real opportunity for, say, the average person?
The key seems to be viability even at a smaller scale, if you focus deeply,
Mm.
specifically on a niche and on consistency. Sources mention small, focused YouTube channels, for example.
Okay.
Channels with really engaged specific audiences. They can make real money, not just ads, but merchandise, maybe direct subscriptions, courses. The focus has to be on quality within that niche, providing real value, and building your own connection with that audience, not just chasing viral hits. That's the shift. Deep niche value.
That makes sense. A practical way to apply depth. Okay, what about more traditional investments? Making your existing portfolio work harder. If you're on a day trader but you have some assets, what's the blueprint there?
Yeah, this is about getting income from what you already own, passively. Option strategies came up, specifically covered calls. Now, this might sound complex, but the concept is pretty straightforward.
Give us the simple version, the analogy.
Okay, think of it like renting out your stocks. You own, say, 100 shares of a stock you plan to hold on to anyway. With a covered call, you sell someone else the right, but not the obligation, to buy those shares from you later at a specific higher price, the strike price.
Okay.
And just for selling that option, that promise, you collect money up front, a premium. Now, you do cap your potential upside a bit if the stock skyrockets past that price.
Right, because they'll buy it from you at the agreed lower price.
Exactly. But in exchange, you get guaranteed income right now. It lets you generate cash from stocks that might just be sitting there, maybe even, as one source put it, while you're binge watching Netflix. It's focusing on creating yield from stability.
Okay, that's a clear strategy. Consistent income from existing assets. Let's shift gears completely now. Real estate. Is the smart money still chasing downtown office towers or flipping luxury homes?
Based on the big economic shifts logistics, essential services, the sources suggest a strong no. The focus in real estate investing has really pivoted. Forget the shiny corporate HQs or those high-end residential flips for a minute.
So where is the focus now?
Industrial properties and healthcare facilities. They're described as, quietly stealing the spotlight.
Warehouses and doctors' offices, why are they the new gold mines?
It boils down to a couple of huge linked trends. First, obviously, e-commerce. The demand for warehouses, distribution centers, logistics hubs is just relentless. They're the backbone of how we get everything delivered now.
Okay, that makes sense. And healthcare.
An aging population plus a general shift towards essential services means healthcare properties, medical offices, specialized senior living clinics offer really stable long-term tenants and leases. They're much less vulnerable to economic downturns than, say, retail or traditional offices.
So it's about investing in necessary infrastructure, not just flashy buildings.
Exactly. The smart focus is on what society needs consistently, not necessarily what looks glamorous. Essential infrastructure, not vanity assets.
Wow. Okay, so this really brings it all together, doesn't it?
Yeah.
We started with that feeling of chaos, the financial overwhelm.
The flaming calculators.
Right, then we moved through needing to fix the mindset, the psychological stuff first. Then understanding that you do need to explore initially, but the real power comes from committing deeply, applying that janitor's consistency to the right modern path. Whether that's a super focused creator business, smarter income from your portfolio like covered calls, or these evolving real estate sectors like industrial and healthcare.
And ultimately, that core lesson from the janitor, the power of quiet, steady, long-term consistency. It fits perfectly with all these modern opportunities. You need the solid mindset to avoid the emotional pitfalls, and you need that clarity of focus to know where to apply that consistency for the best results.
Which leaves us with a really important question for you, the listener, to think about. It connects the mindset right back to the action. If getting your mindset right is the key to getting your money right, then the big question is,
Yeah.
the few things you've chosen to focus on to go deep with, Are they really aligned with that long-term wealth mindset? Are they focused on essential value, on consistency? Or are you maybe still just chasing a kind of frantic, high-effort hustle that's only scratching the surface?
Mm, that's a good challenge. And it maybe use the clarity from today to just take one small focused step. It doesn't have to be huge. Track your expenses for a week, research your first covered call, just something to build that initial bit of momentum.
Excellent point. Start small, gain momentum. Well, thank you for joining us for this deep dive. We really hope this helps you choose your right few things and go deep.